Sam Altman, the CEO and founder of OpenAI, is planning to take a nuclear reactor company public via SPAC. As a reminder, SPAC stands for Special Purpose Acquisition Company. It's where you list a shell company on a public exchange with the intention of acquiring a private company at a later date. SPACs had their heyday 2 years ago, but have since declined, with SPAC issuance down 96% from the first quarter of 2021 to the same time this year. Now, in Altman's case, the target company is Oklo. Oklo is a nuclear fission startup whose mission is to, quote, provide clean, reliable, affordable energy on a global scale. Altman invested in the company back in 2015, and the SPAC is expected to raise $500 million at an $850 million valuation. Now, Scott, we've discussed the decline of SPACs on this show before. Is this a signal that the SPAC market could be making a comeback?
This is going to be a really interesting battle that kind of indicates or provides some insight into what are more powerful forces, both on the positive and the negative side. So depending on, well, let's just call them opposing forces and not assign which is positive and which is negative. On one side, you have the brand equity of Sam Altman. And going back to Times Person of the Year, whatever tech innovator leader aggregates more wealth in a year has a 1 in 3 chance of being Times Person of the Year, because we fetishize technology. We never put the head of a pharmaceutical company or an automobile company on the cover of Time magazine. But our tech innovators are considered geniuses because we really don't understand this shit, and it's the closest thing to magic and religion we have. In addition, you have nuclear. And nuclear is finally getting, in my opinion, warranted attention and renewed interest, and is having kind of a second life. If you're going to move away from fossil fuels, it feels pretty logical that nuclear has to be part of that mix. It'll have to be a bunch of things, but and then you have Bill Gates and a lot of progress or a lot of innovation. So nuclear and Sam Altman, peanut butter and chocolate, really a good tasting combo. On the other side, you have a company that is either pre-revenue or very small revenues, and you have what is arguably one of the worst brands in the financial services sector, SPAC. So which of these forces is more powerful? And what we'll find out is sort of, on the day of the offering and 30 days post the offering, is it like every other SPAC that's gone down 70, 80, 90%? Or is this going to breathe new life into the SPAC market because Sam and nuclear, or Suclear, which will win here? Suclear or SPAC and, what is it? What were the two opposing forces? SPAC and pre-revenue? Right. So SPEVenue. SPEVenue or SPAClear versus SPEVenue. It's just going to be really interesting. And if this thing holds its value or goes up in value, I think what it's saying more, maybe the larger indicator will be that the animal spirits are back. That if people are willing to buy SPACs again, it means we're doing rails in the bathroom again, Ed. I mean, it's okay. Live for today. Don't worry, the markets are back, baby. This is going to be really interesting to follow. Many inside investors sold before the market turned for SPACs, as we pointed out. And in 2020 and 2021, SPAC IPO proceeds were half of total IPO proceeds. I mean, that's amazing. Richard Branson sold 3/4 of his shares in Virgin Galactic for more than $1.4 billion. Before costs and launch today sent the stock down. So SPAC should be called pump and dump vehicles. And then Chamath Palihapitiya, head of the SPAC that took Virgin Galactic public, sold 310 million of Virgin Galactic shares. And that's their right to sell the shares once it's public. Trevor Milton of Nikola sold about 374 million of stock for a weighted average price of about $11 before he was convicted of fraud, and shares dipped to $1 a share. So this is going to be this is going to be really interesting for a bunch of reasons. I guess the blank check company Oklo that Sam SPAC is going to give about $500 million of capital. I'm sorry, Oklo is the nuclear company. Sam Altman SPAC is going to provide about $500 million of capital. So this is going to be super interesting. And also, he needs. I just thought of this. Insight. That's why I get paid the big bucks. But this will help inoculate, be an antibiotic prophylactic against the criticism people soon fall under, and that is that these LLMs are similar to Bitcoin, consuming a massive amount of energy. And someone's going to start doing the math here that these things are warming the earth as we figure out, in the voice of Scott Galloway, please give me some unbeatable pickup lines. Hello, ladies. Hello. Do you believe in love at first sight, or should I walk by again? That's it. That's where the magic happens.
That's brilliant, yeah.
How about breakfast? Should I call you or should I nudge you? That's right.
You'd think that you talked about Altman's brand, he's sort of the prodigal son of tech and AI right now. You'd think that he would be able to go raise $500 million in the private markets from VCs. And, I look at recent big rounds in the venture ecosystem right now. Inflection AI, they just raised $1.3 billion. Humane, which is that secret AI startup that was started by these ex-Apple employees, they raised $100 million. And then you can say, okay, well, those are AI companies. But then you look at Adam Newman's company, Flow Carbon, which raised $350 million from Andreessen Horowitz. Wouldn't you think that he could go just raise this from a VC? Why is he going for a SPAC? And does the fact that he's doing that say anything about the venture market right now?
Because he's hoping the same thing that Branson and Palapataya hope, that investors in SPACs are really fucking stupid and will overpay for shares in a company at a valuation that VCs with analysts who have more than an IQ of 110 and don't have the same FOMO that retail investors have. I mean, essentially, the reason you take a company public is for liquidity, to raise capital for the company, to create a publicly traded stock that you can use for acquisitions. But you're absolutely right. A guy like Sam Altman should be able to raise a lot of money in the private market, but he's decided I can raise money at a better valuation, see above stupid retail investors. And also, retail investors, I don't mean to infantilize them, but generally speaking, the valuation you get in the public markets, because you have a broader pool of investors, because the markets in the U.S. have greater regulatory scrutiny and more hurdles to go through, and typically or historically have investment banks that have tighter criteria or more stringent criteria, finer filters for taking a company public. I mean, if this thing had, you really got to kind of wonder about this thing, because investment banks have no IPO volume. So if this thing had anything resembling a viable business model, Goldman and Morgan would be lined up. Goldman is taking Oddity public, which is this kind of AI meets beauty. It's sort of the first example of a consumer product that is leveraging AI for sort of moisturizers and makeup and coloring that is for a sample set of one and takes into account your unique features and comes up with specific science-driven indications that of makeup that make your cheekbones look better. It's like if you had the world's greatest makeup artist. When I went on MSNBC, I'm telling you, Ed, I looked fantastic. I just looked fantastic, and it's because they have a makeup artist, a lady in a windowless room at 30 Rock, who looks at me and says, okay, this guy's pretty fucking ugly. This is going to take some time. And she literally, I'm no joke, she pours liquid into this weird contraption. And then she puts, those vests they put on you at the dentist when they're taking x-rays so you don't get leukemia when you're a little bit older? She puts a vest on me like that. She tells everybody to stand back. And then she sprays a hose of foundation on me. And I remember when I first went on TV, I don't know, it was 20, right out of business school, 28. I would go in and I would sit down and they kind of look at me and they'd be like, yeah, you're fine.
Yeah, you're good.
Don't worry, you're fine. And now it's stand back. Anyways, but imagine you had AI such that even if you're not going on MSNBC, you're going to get the makeup you want. And they have this great brand called El Maquillage. So it's a cool company. It's out of Israel. They're going public. And guess who's taking them public? Goldman Sachs and Morgan Stanley. Why? Because they can. And Goldman and Morgan's management or IPO approval committee are like, okay, let's look at this business. I mean, this business, I think it did $220 million last year. This year it's going to do $350. It's growing like fucking crazy. It's profitable. The margins in makeup or in beauty are enormous. And it's kind of bringing in that I mean, the margins in moats and brand equity of a beauty company with the power and scalability of technology, shama lama ding and dong, right? And this company has so guess what? They're not doing a SPAC. They're doing a traditional IPO.
Yeah.
So the notion that that Sam couldn't get not only funding in the private market to get this $500 million, he probably could, but he'd have to give up more of the company.
Mm-hmm.
And the fact that Goldman or Morgan Stanley are not taking this thing public is just not, it's just a negative looking forward indicator.
Well, I think the point that you make is the right one, because it would be impossible when you have a pre-revenue company. Like, I was looking at the deck of this SPAC, and there are no financial forecasts anywhere. The closest thing to a financial projection is this thing that they call illustrative unit economics, where they basically project out what cash flow might look like in 40 years. And the rest of it is these sort of hand-wavy macro predictions on nuclear as a global market. They look at the Inflation Reduction Act and domestic production of nuclear power plants and all this stuff, which is what leads me to assume, okay, this company has never made money. So I guess the point being, like, there's no way that this could ever go public via the regular process. Do you think he was unable to raise money, or he's chosen not to because there are favorable liquidity conditions in the public markets? Or you also mentioned this point that he could retain more of the company by going public via SPAC, which I don't totally understand. If you could explain that.
Well, okay, so he's got a gun to his head. He raised a SPAC.
Yeah.
And that is when the market was more favorable, someone as talented with his brand equity goes to an investment bank and says, I'm doing a SPAC. And basically a SPAC says, here's $500 million. It's a publicly traded company. And this publicly traded company has one thing, a deal with you to go find an acquisition target that you think is a good company, and maybe you're involved in management, maybe you aren't. Here's $500 million, and this $500 million, and the stock trades at $10. And the good news for investors is when he announces the acquisition, the owners of the SPAC get to decide whether they want to participate or they want their money back. And in the SPACs leading up to the end of 2022, you'd have redemption rates of 80, 90, 95%, where everyone said, no, you're overpaying for this shitty company that no respectable investment bank would take public. We want our money back. And so then they have to go get staple-on financing or debt financing and try and figure out a way to show up on closing and give the company that they're acquiring the money you said you'll pay for them. And then boom, overnight, just add water, that company is a publicly traded company. So some of the things I was talking about, the dynamics of opting for the public markets, thinking you can get a better valuation, that's all true. But in this case, it's probably that Sam's SPAC was running out of time, because if you don't find a target within 24 months, you got to return the money, and you lose some money, $3, $5, $7 million you spent on underwriting fees and legal fees. So he had a gun to his head. He probably found a target, probably was able to get, decent, mediocre terms, whatever you want to call it, and is going to put $500 million in his company if he doesn't have huge redemptions, and he can probably get some staple-on debt financing. And then overnight, it's a public company, and it's going to be very interesting to see how the market reacts to this thing, because there might be a lot of dentists and car wash owners that go, oh, Sam Altman, ChatGPT, nuclear, I'll buy the stock without looking at the numbers. And who knows, maybe this is the future. Maybe this company does grow into its valuation. But and I'm not a financial advisor, so I won't give financial advice other than don't get fucking near this thing.